All right, day 31 of my journey to a $500,000 stock market portfolio. All right, so first thing, let's calculate my equity. So margin account shows 6,500. TFSA shows 55,500, fluctuates a lot. And RSP shows 17,054. So that's a total of 79,054. Yesterday was at 80,000. So as you can see, it fluctuates a lot depending on my positions. I'm recording this video live October 18 during market hours. So first thing I do is, since it's Friday, options usually expire Friday. So I'm going to look at anything that I need to take care of. So I've got Amazon here, expires October 18. So expires today. It's a vertical put. So it's a put credit spread at 1630. So as long as Amazon stays above 1630, I win. Right now, Amazon is trading at 1761. So this is complete winner. Don't have to do anything. I'm just going to let it expire worthless. So this one, I collected about 65 plus 30. So about $95 out of this one. So this is a 100% profitable trade. Box is December 20. Don't have to worry about it. Dell, I've got Dell, which is a covered call. So I bought the stock at 52.8, 100 shares, and I sold a call option expiring today at a 52.5 strike. Since the stock is trading at 49.79, then my call option is going to expire worthless. So guess what? I can sell another call option for the next month. So I have the option to do it right now, or I can wait till Monday when this option completely disappears, and then I could sell another one. If I want to do it today, I'm going to have to buy this one for pennies and then sell the other one. Let's see what I can get actually. So I'm going to click create order, and to get the create order button, I just need to be under group by strategy layout. Okay, so I'm going to remove the shares here because I don't want to do anything with the shares. I'm keeping them. And this here, buying the call option, this is to close the option that I already have. I'm going to add another call option, which is the option that I want to sell. I'm going to go the next month, which is November 15. I'm going to choose the same strike. So this is basically rolling over the call option, and it's a call, of course. And as you can see, I'd have to pay about $5 to close the initial option, and then I can sell the new option for 80. So I'd get about $75 in net credit on this trade by rolling over the call option. Usually I get over 100, sometimes $200 with Dell. But usually Dell is trading above 50. Right now it's at 49.77. So I think I could wait till next week, maybe get a better premium if I wait till next week. Right now, if I collect $75 divided by 52,500, it's 1.4%. I think I'm going to wait till next week. I'm going to let it expire worthless, and hopefully next week Dell recovers a little bit. It usually trades in the 50s, so it's not normal for it to drop below 50. So I'm going to leave Dell. So I've got DIA, the index that tracks the Dow Jones, expiring October 18. So expiring today, it's a call spread at 278 strike. So as long as it stays below 278, I'm safe. Right now, DIA is at 268, so it's completely safe. As you can see, it's completely worthless. I don't have to do anything. I'm going to let it expire worthless. And this one was a profit of 67 minus 14, so $53. I've got this DIA expiring November 15th. So I still have time, but if I can close something early for a profit, at least 50%, then why not? Why not remove the risk? So I can already see from this column here that they're both showing some profit. This one shows about $30 profit, $36 profit. This one is showing about $40-something profit. Let me just see how much I calculated, how much I got when I opened this trade. So the credit that I received was 96 minus 49 plus 277 minus 233. So that's $91, but at 2 contracts times 2. So collected $182 from this trade. And now if I want to close it, the whole trade, as you could see here on this side here, it shows I can close it for about 50. All right, but it's going to be 2 contracts, of course. So let's just see what it looks like. If I click send order without really sending the order, yeah, I'm going to pay $100 plus commissions of 11 to close it. So do not send. So I collected $182. I can close it today for $100. So making a profit of 82 minus commissions. I think I'm going to hold on to it. I still have time, and it's not 50% profit yet. It's very close, but it's not 50% profit. And None of them are really, they're not in a danger zone yet for me to close. I mean, look, if we look at the 270, what if I close one side alone? If one side is showing more than 50% profit, I guess I can close one side at a time. So 96 minus 49 is 47. And if I wanted to close it, I would close it for, yeah, so it's not 50% yet. Now let's see the put side. If I want to close the put side, I would close it for about $22. And I collected 44. So the put side is showing 50% profit. So I could close the put side and leave the call side. I think I'm going to hold on to it a bit longer. All right. So if I look at IWM, this was a put credit spread at 140 expiring November 15th. I think this one's showing good profit. So I collected about $48 on this one times 2. So about $96. Right now I can close this for about 18. Can close it for 36. So this is showing a 50% profit. 178 minus 130 times 178 minus 130 times 2, $96. And I can close it for about $36. So it's showing I can close it for more than 50% profit. $60 minus commissions. I think commissions will be about $16. So I'm going to be left with $44 profit. So it is more than 50% profit, but am I really worried about it? So that's the other question I have to ask. I've got until November 15, so it's 30 days away, and it's very far. When IWM is trading at 151, this is a 140 put. I think I have time. I'm gonna wait because I still have a lot of time. I do expect for the market to drop. So even if it drops, it's gonna have to drop a long way to reach 140. And even if it does, I still have time. And as time goes by, I can close it for smaller. I can close it for less. So I'm gonna wait. But I wouldn't be doing anything wrong if I close it for a profit right now. It's just the commissions eats up a lot of the profit. So MasterCard is a a call credit spread that I sold on MasterCard at a 287.5. Expires next Friday, so it's got 1 week to go. Right now, MasterCard is trading at 270. So I'm pretty far from the call side of 287.5. MasterCard is a pretty safe stock. Usually moves with the market, goes up in a straight arrow. Right now, it looks like I can close it for pennies. I think I'm going to close it because, it is only 1 week. It's got a small chance. What are the chances that MasterCard goes from 270 to 287.5 in exactly 7 days or 5 days? 17 points. Can MasterCard move 17 points in 1 week? 17 divided by 270, 6%. See, if I don't want to take the risk, why not just close it for a profit? And this one's going to be a good profit. So 115. So 115 minus 72, 43 times 2, because I sold two contracts. So $86 profit. Now, or $86 is what I collected. Now, if I wanted to close it, I'd have to buy it back here at 10, and then there's no one wants to buy. So I don't know how much I can close it for because there's no bid. But I could see the last trade was 3 and 9, so I could probably close it for about $6. So you see there's no bid. It's showing here $4 if I want to close it, plus commissions of 8. So let's just see if it's worth it. So I'd close it for 4 minus commissions in and out of $16. I'd be left with a $66 profit. So it's not bad. So basically I'd be spending about $20 just to avoid risking or losing the max loss, which is the difference between the spreads, 287.5 and 290 times 2, so $500. But I mean, the chances that MasterCard goes to 287.5 in 1 week is quite small. Let's go see where it was trading at MasterCard 1 month ago. So, oh yeah, it was at 290 September 9th. So 1 month ago it was trading, actually let's look 1 month. So 280 was at 280 not long ago. October 17, yesterday it was at 280. Wow, okay. October 11, it was at 280 as well. Took a hard drop here. Yeah, I don't think in 1 week it's going to go back to 290 where it was September 9th. It would need really 5 really good days in a row for MasterCard to go up 17 points. So, you know what? I'm going to leave it. I'm going to try to let it expire worthless. I'm going to keep my eye on it for sure. Got this NVIDIA vertical call expiring November 8th at a 202.5 strike. This one is not doing so great. This one was actually in trouble when NVIDIA just jumped up like crazy, but I guess it came back down today to 188. It would actually be a good idea for me to close this because this one could be troublesome. I sold another one when this one got in trouble, when the first call credit spread got in trouble at 202.5 because NVIDIA was trading close to 200. I sold another one at 210, collecting $90 here. So I collected $90 here. I think here I collected about 80 something, $88. But this one was getting in trouble. So I decided to sell another one for 90. So this one here for sure it's going to be profitable. This one was in trouble, but now it's showing a small profit. So I could probably, I don't know, maybe I should close it to avoid getting in more trouble and then just keep this one. That could be an idea. 188. Plus it's until November 8th. So it has time. NVIDIA definitely has time to go up. So yeah, maybe I should close it. Let's see what the delta on this is. It shows 25. So the higher the delta usually means that the higher the chance of the stock reaching that price come expiry date. I'm going to place an order to close it. So basically I'm just going to click create order, and you know what, if it goes through, it goes through. If not, but I'm going to go on the bid side. I'm going to exaggerate. I'm going to go at $65. Buy to close, sell to close. So I will have made a small profit on this one, very small one, but it allowed me to sell another one here, which I think has a better chance of being successful because it has a higher strike. This one was in trouble, but the market gave me a chance, I think, to close it early to get out of it without losing money. So I think I should take it. And so basically this is the process that I go through almost every day. And maybe I could sell a put actually because it dropped a bit today, and then creating an iron condor. If I want NVIDIA option, I'm gonna go look at what the expected move is for November 8th. I see that they have earnings November 14th, so I want to stay away from earnings right now. Let's just go see what the expected move is at around 188. So 187.5 is the closest strike I can find. So I'm gonna look at the premiums on the call side and the put side, and $7 and $6, so about $13. So let's say $15 is the expected move. So if I want, I could sell a put on NVIDIA expiring November 8th, creating an iron condor because it's gonna combine with the call spread that I have on NVIDIA already at 210. So 188 minus 15 is about what, 173. So maybe a put at 172.50 and then 167.50, collecting about $50. So the risk is too big though. The risk is $450, collecting only $50. And plus I know NVIDIA can drop hard when it wants to. So probably not going to do that. All right, so skip that. You know what, I'm going to cancel the order. I don't want to close it. I think it has a good chance of being right, because I don't think NVIDIA is going to go over 200 come November 8th. I'm going to cancel order. Hope I don't regret this. All right, then I'm going to look at my other positions. If there's anything I can close for a profit. This is November 22nd, so it's still too early. It's showing a loss right now. I've got this November 29 and iron condor on the Qs. It's showing a small profit on the call side. It's showing a loss on the put side. Still too early to do anything. I've got an iron condor on the Russell 2000, November 15. It's showing a loss on both sides. Nothing to do there. November 29, iron condor on the Russell 2000, showing a loss also on both sides. So that's kind of weird. Why? 1526. I guess premiums went up. So the VIX went up today, probably. That's why. So although I'm inside the range, but yeah, as you can see, the VIX went up 7% today. So the value of the premiums go up. And when I sold this iron condor, the VIX was pretty low. So that's why it's showing a loss here. So I've got SNC here, a covered call expiring today. It's going to expire worthless. I'm going to wait till Monday to sell another call option. SPX vertical call. So call credit spread on the SPX at 30.85, November 15. It's showing a very small profit, but I still have time. Not worried about the SPX reaching 30.85 come November 15. Right now the SPX is at 29.78. Wow, okay. This is a call credit spread on the SPX at 30.85 as well. So this one's expiring worthless for sure because the SPX is at 29.78 today, and this is expiring today. So this was a full profit. Don't have to close it early. I get to keep the full profit. So 854 minus 767, $87. So this one was an $87 profit over a capital invested of 500 minus 87. So 87 divided by 413. So 21%. and I'm sure it's less than 4 weeks. All right, so another SPX November 15, 3100 call. Yeah, this one still has time, still safe, and it's showing a small profit here of $20. Not gonna do anything yet. November 15, another call, 31.25. This one should be showing a much better profit. Yeah, $25 and $30. So 50, right now it's showing a $55 profit. I guess I could close this one early. Let me think about it. So 31.25, 30, maybe I can combine these two and close them out early. Here, let's see what, so this one I collected 50 and 35. So this one I collected $85 on this call. I can close it for $15. Wow. Yeah, so although I think that the 3100 is safe and unlikely to be reached by November 15, I should be mechanical about this and close the trade whenever I can make more than 50% profit. And right now, I sold this for $85. I can close it for $15 or even $20. So it's definitely more than 50%. But I just find that I've got, what, 4 weeks to go? I don't think the SPX is going to reach 31.25, which would be an all-time high in 4 weeks. So this has a good chance of expiring worthless. So let's leave it for now. This one here, this one's in trouble here. This one's 30.50, November 15. So this one for sure is going to get touched, or has a good chance of getting touched. So you can see that it's showing a loss on the call side, and it's actually showing a loss on the put side as well. But that's probably because the VIX went up. So I'm not going to touch it yet. Still have time. This is a vertical. This is another call credit spread on the SPX. This one's showing a very good profit. So if I close this one here, I need to close this one, but I won't. I've got this iron condor on the SPX, not showing a profit, nothing to do. So I have a lot of time. None of them are in trouble. None of the strikes are in trouble. I've got a SPY on October 30th, 307. This one could be in trouble. We've got 2 weeks to go, I think. Yeah. 2 weeks to go, a little bit less than 2 weeks for the SPY to reach 307. Actually, I think it's safe. I don't think the SPY is going to reach 307 in 2 weeks. It is showing a good profit though. I think it's showing more than 50%. Yeah, it's definitely showing more than 50%. I can probably close it for very little. See, actually, I can probably combine these two vertical calls. I can close them together and save on commissions. So every time you open an order, if you're under active trader pricing, it's $5. If you don't have active trader pricing, it's $10. So if I combine them, I'll pay $5 once instead of paying $5 twice. Then I'll just pay 75 cents per contract. I've got 2 contracts. I've got 4 contracts and 2 contracts here. So 75 cents times 6 plus the $5 for entering a trade. So it's not so bad, but I'll be paying pennies. So here they're already worthless. So I feel bad buying it, but because I'll be paying very little, might be worth it just to remove the risk off the table. The risk being the SPY going above 307 come October 30th. So the SPY is at 297 now. October 30th is almost 2 weeks, a little bit less than 2 weeks away. So I have to decide, does the SPY have a good chance of going from 297 to 307 in less than 2 weeks, making all-time highs? I don't think so. I think it's going to expire worthless. But I just feel bad because I'm not paying anything, so being cheap for nothing. Let's see if I close this, it'll be, where's the other SPY? And then see if I want to close this one at the same time, I'll go to customize and add the call that I want to close. So I can add the October 30th 307, October 30th 307, and then add the October 30th 310. All right, so I sold the 307, so I'm going to buy it, and then I bought the 310, so I'm going to sell it. I'm doing the opposite to close the trade. And I had 2 contracts, so +1, +2, +2. And then, so now, see, it's all pennies. There's nothing. 0.02. Let's see what it gives me. So buy to close, sell to close, buy to close, sell to close. I'd pay $2, but I'd pay $9.45 in commissions just to remove the risk off the table. But it might not even go through because there's no bidders. No one wants to buy this one. So it's 2 minus 1, and then 8 minus, it's probably going to cost me more than $2. So yeah, but I think it has a good chance of expiring worthless. I'll just ignore it. All right, and then this SPY here, November 4th. So this one I should be worried about this one. The 305 call, November 4th. I think it has a good chance of reaching it. Let's see if I can close this whole iron condor. So I collected 59 minus 13 on the call side plus 220 minus 149. Collected $117 on this iron condor. I can close it for $53 today. So isn't that half? That is half. Yeah, I can close this iron condor for half. I think I should do this because I think the 305 is gonna cause me trouble by November 4th. This one has a little bit more than 2 weeks to go. Yeah, I'm gonna close this one because I'm worried about the 305 November 4th. Let's see what the delta, yeah, it's a 24 delta. So you can see up here, I've got a 307 on October 30th. I've got a 308 October 25th. Now, not worried about the 308 because it's sooner and it's further, right? The date, the expiration is sooner and the strike is further, so I'm not worried about it. 307 though is the strike is closer, but the expiration is further, so it does have time to reach 307. Now this one's even worse. This one's even further, November 4th, and the strike is even closer. So this one deserves, I think, to take action on. And this one here it's 308. This one's even worse because it's November 22nd, but because the market is cyclical, even if it goes to 308, it's gonna come back down before November 22nd. So I'm gonna put an order to close this one because of this 305 call. Right now you can see it's between 52 and 56. The SPYs, there's really no spread. If I want to close it, I have to go for 56, but I still have 3 hours to go in the day. I'm gonna put it at 50, and if it moves down, then it moves down, and I get to close it, and I can adjust throughout the day. So I'm gonna put it at 50 right now. So buy to close, sell to close, buy to close, sell to close. $50 plus $8 of commissions. Send order. So now it's in my orders. All right, what else can I look at? This still has a lot of time. So this Tesla put credit spread is amazing. Sold a 200 put at October 18. It's expiring worthless for sure today. Tesla's at 256. Don't have to buy it back. Although I almost thought of buying it back 2 weeks ago, but I'm happy I didn't. I get to keep all the credit that I received, and I don't have to pay more commissions. So Uber was a covered call that went terrible, of course. Bought it at 40, and it just went down to 29, 28. But I've been selling call options on it at a 31.5 strike every week, and I'm just rolling over the call option. I already sold the call option for October 25th at a 31.5. Uber right now is trading at 31.5. I've got X here, United States Steel, doing pretty bad, down $3,000 on the stock itself. But I'm selling call options as long as I can, and I'm even picking a strike that's lower than my cost of $18. And luckily, it never goes past that strike because it's just doing terribly. Zillow, I rolled over the call option. My initial strike was $34, so I'm okay losing the stock at $34. So I rolled it over till November 22nd at a 34 strike as well, collecting, I believe, about $190. So not bad. So doing okay with Zillow, bad with United States Steel, bad with Uber, good with Dell, bad with American Airlines, but pretty okay with the credit spreads. It's just a matter of sometimes I'm always hesitating whether I should close it early or just wait till expiration. Greed comes into play, right? All right, Afria has a call option October 18, but I'm going to let it expire worthless, and then on Monday I'll sell something. See, Bed Bath & Beyond, I need to take action because as you could see, my strike is 12 and Bed Bath & Beyond is trading above 12. So if I do nothing, my shares will get sold at 12. So I have to decide, do I want to sell my shares at 12 and get my money back and use it towards something else? Yes, I do, because I don't want to buy individual stocks anymore. I want to stick to SPY and Q, but I don't have enough money anyways. Even if I get my money back, right now I have 2,700 buying power US in my TFSA. If I get the money from Bed Bath & Beyond, which represents about 3,700 US, it's not going to be enough for me to buy more Qs or more SPY. If I do cover calls, I want to do it on the Qs like this here, like this one here, 100 shares of the Qs or the SPY. So, and since I can roll over this Bed Bath & Beyond covered call trade for more premiums, I think that's what I'm going to do. So if I want, I can actually close this whole trade and get $11.95 for my position. But what I could do is to roll over, basically I just click create order. You can see that it automatically shows the 2 lines of my trade. I'm going to remove the shares line, keep the option line. So this here is to close my options that I own already. I'm going to add a call. I'm going to sell, go to October. Let's go to November 15. I'm going to pick a 12 strike. I'm going to put 3 contracts. And as you can see, I can collect $51 per contract if I roll over the call option. So it's not bad actually. $51 divided by 12 in 4 weeks. That's a return of 4.2%. So that's good. I think that's what I'm going to do. I'm going to pick something in the middle. So maybe 57, 56. All right. So send order, buy to close, October 18 calls, and then sell to open, November 15 calls at a 12 strike. Yeah, that works for me. So I could collect $168 from Bed Bath & Beyond with this trade, paying $9.46 in commission. Send order. Let's go for it. And looks like it already got executed. Oh, I could have gotten more than whatever. Okay, not bad. Now I feel bad. Now I feel like I could have gotten more than 56. All right. So yeah, I rolled over my call option on Bed Bath & Beyond. So I'm still in the trade. CHK expires today as well, but I'm not going to roll it over right now. I'm going to let it expire worthless and then sell call options on Monday. Why? Because I've got 11 contracts, so I'm going to pay a lot in commissions, 75 cents per contract. So instead of paying for it, I'll just let it expire. FCX, same thing. I'm going to let it expire and then sell next week. And then Grubhub I could do something with today actually. So let's look at it. So my cost is 70. I cannot sell below 70. I'm going to remove the shares. I'm going to buy back the call option to close it, and then I'm going to sell something further out. So if I go to November 15 and then choose a 70 strike, I'd collect about $25, $30. Not good. What if I go 1 week away, but then this time get closer on the strike, take the risk, hopefully that in the next 5 days, Grubhub does not reach 60, for example, I can collect $10 or $15. Let's get even closer. Or what if I go back to November 15, but instead of picking 70, picking 65? I can collect $75. So that's not bad. But then I need Grubhub to stay below 65 in the next 4 weeks. And right now we're at 55. So does Grubhub have the potential to move 10 points in 4 weeks? I think it can. So I don't know. I don't know which strike to take, because if I take the 70, I'll collect $25, $30. It's not worth it. Well, it's better than nothing, but it's really small. Because the reason I pick 70, because that's my cost. I don't want to risk losing my shares below 70. If I want to take the risk, I can choose a 65 strike, collect more money. Or I can go weeklies and then get closer. Because it's a smaller time frame, stock has a smaller chance of moving that much in 1 week. So maybe if I go maybe 59, $20, I can collect $20 in 1 week. But then I have the risk of a much lower strike. I have to ask myself, can Grubhub move from 55 to 59 in 1 week? And if it does, do I have a plan? So what will I do? I think I will go with I'm going to go with November 15. Actually, first, let me see, when does Grubhub have earnings? Because usually stocks will move hard at earnings, right? So October 24th. Wow, that's next week. Okay. So usually when there's earnings, premiums are higher. So I want to take that into consideration. I want to take advantage of the high premiums, but all right, so I think it's safer to stay with my original strike. Or should I wait after earnings and then sell something? Either the stock goes up and gets closer to 70, so that's going to be good for me. Yeah, you know what? I'm going to let it expire worthless, and I'm going to take care of it next week. I want the Grubhub to go up a bit so I can sell better premiums. Yeah, so I'm going to leave Grubhub right now. This is October 25th, nothing to do. IMGen, it expires today. I'm going to let it expire worthless, and I'll take care of it Monday. NEO, same thing. I'm going to let it expire worthless and take care of it Monday. So this stock I bought at 5. Stock is down to 149. So isn't that beautiful? 70% down. But I've been selling call options at a much lower strike, at a $2 strike. So that gives me the risk that if NEO goes above $2 come October 18, which it won't, I'm forced to sell my shares at $2 unless I buy back the call option for a loss. But luckily, NEO stayed below $2, so I ended up keeping the premiums that I collected from selling the call option. And now next month, for sure, I'm going to have to pick the same strike of $2 because at $5, I wouldn't be able to collect anything. So the Qs is, I have 100 shares of the Qs, and I sell weekly call options on them. I already rolled over the call option before recording this video. I kind of regret it because it definitely could have gotten more out of it if I had just waited. I collected about $95 by rolling over this call option. Okay, and that expires October 25th. But if I had waited, here's what I could have collected. Instead of $95, I could have collected about 133. Okay, it's not a big deal. About $40 more. Okay. Okay, not a big deal. But yeah, so this one expires October 25th, 191 strike, collected $95. Pretty good. Happy with it. Teva moved up this week, but still below my strike of 8.5, so I'm safe. But I'm definitely down on the stock a lot, $2,500 as you can see here. But I'm going to let it expire worthless month, and then on Monday I'm going to sell another call option. Probably go with a $9 strike this time. My cost is about $15 though. And then in my RSP, finally Bombardier, October 18. I've got a strike of 2. Right now it's at 161. So I'm going to let it expire worthless, and then Monday I'm going to sell more call options. L Brands took a hard drop. My cost is 26.2. L Brands is trading at 16.7. And last time I sold a call option at a 21.5 strike. So I took the risk and I ended up winning because it never touched 21.5 or because it's going to expire worthless because it's trading at 16. The stock is trading at 16 and my strike is 21.5. So I'm safe. So I'm going to let it expire on Monday, and then I'll sell another call option. And I'll have to decide which strike to take. Novavax is going to expire worthless. I'm going to sell a call option on Monday. Square, I already rolled over the call option till November 29th. Collected about $200 from that. So I'm happy with that. I think I picked a 69 strike, which is my cost. So I picked a safe strike. So peace of mind. Yeti, actually, I could do something about Yeti today. Let's place it. I'm going to roll my call option on Yeti. So this one expires October 18 at a 33 strike. Yeti's trading at 32.7. All right, so let's create order, remove the shares. This is the option that I have to buy back. I'm going to add a call that I'm going to sell. So let's go till November 15, or maybe even further. Let's go to November 22nd. Pick the same strike of 33. And as you can see here, I can collect pretty good premiums here between 240 and 265. So you know what? Let's do 2.6. Send order. That's not bad actually. That's a good return. $260 on 3,300 invested. So I'm closing the call option, today's call option, and I'm selling a new call option on Yeti, same strike, but different expiration, November 22nd. Send order. Let's see if it goes through. I guess I can modify it. So let's go maybe 255. Send order. Nope. Let's try 250. Come on, how low must I go? So the bid here, 240, 250, and then I have to buy this one back. The ask is 15, yeah. Should I just let it expire worthless? Or should I get my money back and use it towards something else? But yeah, it's not going to be enough to use it towards something else anyways. Yeah, but the premiums are too high to ignore. All right, let's try 245. That's my final offer. Jeez, nothing. 2.45 divided by 33, 7.4% return, pretty good. But why won't it go through? It's because I have to buy back the call option. That's the problem. So this here shows this is a bit of time value because the stock is under 33, but there's still 3 hours to go till market close. So either I wait. Yeah, you know what? I'm gonna wait. I'm gonna leave it on, and then as time goes by, as we get closer till the end of the day, the time value of the call option that I have to buy goes down, decays. So I'll be able to collect a better premium. So I'm going to leave it at 245 and I'll just keep an eye on it. All right, so for RSP, that's it. That's all I'm doing today. TFSA, everything's taken care of. Bed Bath & Beyond is rolled over. Grubhub, and the rest I'm going to wait till Monday. And then margin account, I've got this iron condor that I want to close. And now it's trading at between 52 and 57. Not sure if I was hesitant about some other credit spreads to close, but I think I want to go till expiration so I don't have to buy back and spend commissions. All right, so this was day 31. So if you have any questions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.